about the harmonic scanner. All right. So all you do, you press on the little icon, then the big one will come up and just open it, and the scanner will open. All right. Now, when the scanner opens, sometimes it might open like this, everything all confused and everything all around, right? So all you do, you can either use your mouse to, if you have a traditional mouse, one of these, right? I like it. I find it really, really helpful just to maneuver. Or all you do, you can just come here to the bottom. You have the minus and the plus option, right? It's invisible. So to make it come visible, all you need to do is just put the mouse around down here and it will come up, and you can zoom out, okay, on the minus, or you can zoom in, up to you, right? Then if you press any empty space around the chart, all right, any empty white space, not on the scanner pattern, but any white empty space, and you can drag it around actually, right? You can drag it around. And if you can even drag it up and down. But sometimes to drag it up and down, you need to do what? You need to come to the price bar, you need to shrink it, even if you just shrink it a little bit, then it will allow you now to move it all around. Okay, sometimes people feel stuck because sometimes they're not able to pull it up and down. All you need to do uh, when that happens, just come to the price bar and just shrink it a little bit, and now it will allow you to just do it. All right. Now, here on the side, on the right-hand side, you have the time frame, different time frames that you can have look at, right? And what you do, so the time frame simply, is a different times that you watch in the market, let's see, all right, that you see in the market per se, right? So for example, if you want to have a look at 15 minutes opportunities, the scanner will have many, many, many opportunities throughout the day, all right? Let's say, for example, that you are someone that likes to trade on the 15 minutes chart, okay? So all you do, you select the 15 minutes. Then the next option is for you to choose the broker, all right? The scanner will have various brokers, all right? All you do, I normally say just explore, all right? Because every broker, most of them will have the same currency pair analyzed. It might just differ into the entry and the stop loss. I mean, into the numbers really, right? But overall, it's the same direction bias. So just come into it and explore. So once you choose the time frame that you want to have a look at, the opportunities, then you choose the broker. Let's say, for example, I select FX choice. Then some trade ideas will come up, right? The most recent ones are the ones on top. The most old ones are the ones at the bottom. So you know which ones are recent, all right? And actually, there's a harmonic scanner Telegram. If someone can please drop into the chat box if you have it in your hand, right? So that Telegram, or just reach out, that Telegram group, it gives you alert whenever there's a new setup. So you know straight away, okay, there's a new setup into the money scanner. So you know which one is the most recent straight away, and just come into it and see the trade idea and the coordinates, all right? So then the currency pairs come up. All you do, you just need to have a look at the trade idea and do some confirmations, all right? So you want to make sure that you just don't enter blindly, okay, on what you see. Do some extra confirmations, and the confirmations that I had written down here, all right? The confirmations that I had written down here, and we're gonna go through them now. I'm just showing you guys around the scanner. So down here, the currency pairs, here you choose the broker, and here you choose the different time frame. And when I say time frame, it simply means how fast that you see the market moving. Okay, it's all overall in the same time, but you can choose to see things happen quicker. Let's say for example, right? So if I select 15 minutes, it simply means that each candle, right? Each candle represents 15 minutes. So just put it this way, every 15 minutes, a new battle between the buyers and the sellers will start, a new fight. And every 15 minutes, information that you need really to do. Now, let me just, now the confirmations that you need to do, right? Let me go back here to the confirmations. Now, the first one, right? The first one is straightforward, okay? But it's so important. You need to find the entry, all right? You need to find where the entry is, where the scanner is telling you to enter that trade. You can either do this by identifying where the letter D is or where it simply says entry, all right? Now, if the entry is at the top, the scanner is telling you this currency pair is to sell from this entry point. It's a sell because you sell from the top to the bottom, all right? But if the entry is at the bottom, so you know the scanner is telling you to buy that currency pair, right? So straightforward, by identifying the entry, you know if it's a sell or buy, all right? Now, let's see, for example, in this case, all right? So what can we see? So the entry is here. It says entry. The letter D is here, right? It says entry. So if the entry is at the bottom, what type of trade this is? Is it a buy or sell? Can someone just drop it into the chat? If the entry is at the bottom, if it says entry at the bottom, what type of trade it is? A buy. Thank you, Andrea, Katrina, and Kani. All right, it's a buy. So straight away, we know, okay, the scan is telling us to buy the Canadian dollar against the Japanese yen. It's a buy. So we know that. Fantastic. That's the first confirmation done. Then secondly, you need to identify where the price is currently. All right. And to identify that in the simplest way, just look at the last candle, the one that is opening right now. Okay, the current fight. So the current candle, the last candle represents the price. And when I say that, okay, so this is the most recent candle. This is the last candle. Okay, everything to the left already happened, right? Everything to the left already happened. Everything to the right, right, is happening. So the last candle represents the price, where the price is currently, right? That's a second confirmation, where the price is currently. Okay, it's really important that you do that. Now, the third is you need to identify where TP1 is located. All right, you need to identify where TP1 is located. Right, we know it's a buy. Okay, let me just do this. This is especially for people that are really new and never had any contact with the Harmonic scanner. So we know it's a buy because the entry is here, right? It says entry. Entry is at the bottom, right? The letter D is here also. Now, we know where the price is currently, which is here. Let me just, which is here right now. And now we need to identify where TP1 is, right? And now, guys, TP1 is here. So it will tell you TP means take profit. So TP1 is here, right? Right. So now we did 3 confirmations, right? We know where the entry is. So we know what type of trade it is. It's a buy. We can see where the price is currently, and we know where the TP1 is, right? 3 of them done. Now the fourth one is, if this one is really to decide if you're gonna enter that trade or not, right? So the fourth one is, if the price is already close, okay, close to, already touching TP1, it's not really safe to enter that trade. All right, especially if, when you're new, but when you get more experience, you'll get to know how to enter in the market, right? How to enter when the price is somewhere, and you can identify entry within that area, right? But if you are new, right, if the price is already close to or already touching TP1, it's not safe to enter, right? because you always want to try to enter close to the area where the scanner is telling you to enter that trade, all right? But if the price still far away from TP1 or still around the entry point, it's safer to enter that trade, all right? And when I mean that simply means, for example, in this case, right now we see this happening, right? We see this happening. So we know it's a buy. We know the price. I think I got it. Fantastic, right? So it's a buy. The price is here. The take profit one is all the way up here, right? Is all the way up here. There's a room between them, right? And the price is not really far from the entry point, as you guys can see. Even if I remove here, this one here, and just open it all, the entry point is here and the price is here, right? It's still close to it. It's not very far, but it's still far from take profit one. There's a room. So in this case, it would be safer to enter that trade. You could go and do a market execution and enter that trade for a buy, all right? But if the price is already, for example, let me just save this on here. I'll come back to it. It's a CAD JPY. I'll come back to it, so I don't lose it. Fantastic. Let's say, for example, let me just look for something that is already on TP1 or something, just so I can give you guys an example. Let me even look at 1 hour. Let's see. I'll give you guys a good example of something that you guys should leave alone. All right. For example, here, look at this, right? If you guys come to something like this, okay, it's way safer to leave it alone than enter from here. As you guys can see, the price is really very close to TP1. It's basically touching it. Okay, the price already moved too far away from the entry area. So you always want to try to enter far away from take profit one and at least close to the entry, because you want to catch that move. It's a safe area to enter. The reason why, if you enter somewhere in the middle around TP1, what might happen? Retracement. Okay? Well, what might happen is retracement. I'm not saying that it will happen all the time, but you better you better prevent than end up happening, right? Because the price is in the middle of nowhere basically. And what might happen? Retracement. And if you enter here, the price start going up. Now you are in drawdown from here all the way up to here. But if you enter, let's say from here, right, the price came down all the way down here, even if the price retrace a little bit, you're still in profit because you enter all the way from here. So everything from here till here is your profit, right? But if you enter here and the price start retracing, you're losing all of this, right? So you always want to enter close and very far away, close to the entry point area and very far away from take profit one. As long as that is not something like this, it's okay. But if you see something like this, just go ahead and explore. Look for something else. All right. So this is actually a good example. The trade to go to TP1 and reversed, right? So that's what you want to try to prevent. So you always want to catch that move at least all the way to take profit one, right? And once it comes to take profit one, you protect your trade and let it run. And I'll go over that, okay? That's why. Yeah, like Keisha said, too many. For example, we had one example today, NZD USD. I was already on that trade before they sent it actually into the group, right? And I'll go over it. And what happened? The trade went to take profit one, and look what happened. Came down. It started coming down. So this is what you're trying to prevent. So always enter around the entry point and try not to enter when the price is already on take profit one, already close to it or touching it. Okay? Because the price is already in an area that is just in the middle of nowhere. All right, and anything can happen. Okay, does it make sense, guys? I hope it's making sense. All right, so if you do all these confirmations, and the last one is you check the currency strength. this can also help you to decide really if you want to enter that trade at that moment or not, the currency strength. All right, currency strength meter. For those who don't know what the currency strength meter is, it really can help you to decide if you really want to enter that trade at that moment. So once you do all those confirmations, okay, let me check the currency strength. Let me see how strong it is currency. Should I be selling it right now? Should I be buying it right now? And what you want to do, so more bars the currency has. So the currency strength shows you the strength of the major currencies. All right, euro, GBP, USD, Australian dollar, Japanese yen, Swiss franc, New Zealand dollar, Canadian dollar, Norway NOK, Denmark NOK. All right. So it will show you the strength in real time, right? How strong is that currency right now? So more bars, stronger the currency, right? More bars, stronger the currency. So for example, if I want to trade a strong currency against the weakest one, right? I want to be buying that currency, right? For example, if I want to buy euro, I want to make sure that the pair that I'm trading euro against is way weaker and euro is way stronger, right? So for example, in this case, so we've seen, let me have a look, for example, let it just load. So let's go back to NZD USD. What happened, right? Let it just load. I think someone said something into the chat box. Yeah. So let me go back to NZD USD. Just load. Let me go back to it, and I will show you guys a perfect example, right? The time that I bought this NZD against USD, right? NZD here had 3 bars, right? 3 bars. US dollar only had 1. But now, look what happened. They both have the same power, really, right? So that's why this happening right now. There's like a power struggle. It's just staying trading in between this range, up, down, up, down, up, down, because both of them have the same strength. So you always want to make sure that you're trading a strong one against the weakest one. If you buy it, you want your main currency to be stronger. If you're selling, you want your main currency to be weaker than the opposite one, right? So the currency on the left is always the one that you're buying or selling, comparing to the other one, the base currency. All right. So the currency strength shows you which one is the strongest right now. So it gives you an idea which currency pairs they should be trading against, which one you should be buying, and if you buying it, if you should be buying it right now, and everything. So use it as a confirmation, right? Use it as a last confirmation to see, okay, all the confirmations match. Even if I enter this trade, I know already I can expect something to happen. I can expect some retracement, even if the currency pair that you're buying is weaker than the opposite one, but all the confirmations match. You know already that is expected retracement, right? Is expected because the currency is actually weaker. So use this alongside all the other confirmations, guys. Trust me, it helps a lot to know if you should be buying or selling at that time or not. Okay. And whenever you see, for example, big candles coming from nowhere, if you come and check the currency strength, it's probably the opposite currency goes stronger, right? Then the big retracement happen. It basically go 1 extra bar. And be refreshing it every 5 minutes or so. Refresh the page because the strength will change. For example, euro today, the whole day was strong. Whole day, strong and solid, just like this. Euro, it just fly to the moon today, right? It was strong whole day. So use the currency strength, do all these confirmations, check where your entry is. If your entry is at the bottom, you know they're telling you to buy, right? Check where the price is currently. If the price is very close to the TP1 already touching it, leave it alone. Go and look for something else, right? The scanner has plenty of trade ideas, okay? And you know, if all the confirmations match, go ahead, enter your trade and use the right risk management, all right? So these are the basic confirmations, okay? You have to do it regardless. And and this is gonna be something that you're gonna do automatically just by looking at open the scanner, and you will know, right? But it's important to have it written down. All right, let me just go back here. Make sure that you guys have these confirmations, right? Now, I want to talk about something that I showed last week, which is 2 extra confirmations that can help you guys really, to take the money scanner to the next level. But it's something that you guys really need to practice and really train your eyes to see. Once you guys are used to it, it's just by opening the scanner and it's there straight. You can identify, right? And these 2 extra confirmations are, let me just put it here. Let me track this. Awesome, right? So there's 2 advanced confirmations, all right? There's something called divergence. And divergence is, there's an indicator RSI, which I will show. The RSI indicator is going into the opposite direction. So the indicator will be showing something, will be going into one direction, but the chart, I mean the chart will be going in the opposite direction, right? Divergence, which means it's a lie, right? And there's a rejection candle. A rejection candle, I'll give you guys an example, but it's always, if you find these 2 together happening at the same time, perfect, really good, all right? It's a big, strong confirmation. And this is what our side is. So now we went through the basic one, right? That's out of the way. Now let's go a little bit deeper. If you are new, don't worry, it's normal, right? And this is something that you just really need to get used to it. Okay, let me put this one, let me put this one in the corner up there. Now the indicator that I'm talking about is the RSI. RSI simply means is a short form for relative strength index. Okay, it tells you the who's really in the market. That's the way I see it. If it's the buyers or the sellers, right? And sometimes what's happening up here in the charts is the completely opposite from here, right? That's called divergence, right? It's a lie. So you know straight away who's in the market really at that moment, okay? Now, how does it work? You can make it full screen here on the side, right? You can expand it. You can make it full screen. Let me just explain you guys what this line means, right? The 70 line, when the graph here is, the line is on top or really close or past to it, it means the price is on a overbought area, right? Is already depreciated too much, is on the overbought area. So you know already it's just a matter of time for that price, for that currency pair start to drop, to fall. But it doesn't mean that the line will not come to the 70 line and go past it, right? It will. Most of the times it will, most of the times it won't. But it's just don't just rely on it. So don't just expect the price to the line to come here and straight away go down. No, sometimes what will happen is, let me delete this. And I had someone asking this in the group actually yesterday. What will happen is, right, the price will be doing this, and it might even go past and keep going before coming down, right? So don't expect the price to, and just get rid of this. Fantastic. So don't expect, don't just rely on this, but it's just an indication, right? So you know where the price is at the moment, and you know that it's just a matter of time, right? Let me get rid of, fantastic, right? So the price might even go past the 70 line, then before start coming down. But you know already when the price is already around 70 line, you know is on an overbought area, right? And now the 30 line is an oversold area. So when the price is close to the 30 line or past it or touching it, you know when the price is in the area of oversold. It's just a matter of time for the price start rising. So you have this as an indication to know when the change of momentum can possibly start happening, right? Now, The same thing can happen if the price comes to a over. Let me put this on here. Let me delete this. 1 second, guys. The same thing can happen. The price can come all the way to the overbought area and go past it and keep going down. But you already have as a strong indication, right? Price can do this and keep doing this and go past it, right? Before start going up. Okay. Sorry about the drawing, but just to give you guys an example. As you guys can see, it went past it here, and it will happen. Okay, but the RSI gives you that indication. Okay, it lets you know where the price is. Now, how do you spot the, how do you use it to know to spot divergence, right? And this really can change the game when it comes to the harmonic scanner, right? But you just need to get used to it. Now, how do you use it to spot divergence? What's happening here supposed to be the same here, right? Right now we're basically seeing the same thing here, right? It's happening here, okay? Now, sometimes what happens is, let me. I think I had an example last week. Let me just spot one quickly from here, right? And boom. For example, in this case, right? So what do we see? Let me just open this full screen so everyone can see. Let me put this lower. I hope everyone can see my screen. In this case, right? So how do you spot divergence? Right now up here. Hold on. Okay. So what's happening up here should be happening the same down here, right? So when the market is going up, it's supposed to be doing higher highs, okay? Higher points. And when the market is going down, it's supposed to be doing lower highs, all right? But what's happening here, all right? So this point here, this high here, is supposed to be higher than this one. This one here, this high, let me zoom in. This is how you guys can know really if you guys can sell that currency pair also. This high point here is supposed to be higher than this one, right? Okay. On the chart, it is. But when we come to the indicator, is the completely opposite happening. This high point, right, is actually lower than this one when it comes to down here. So what you want to do is come to the side and grab let's say a vertical line, right? Grab a vertical line and put it on top of that previous high, right? Put it on top of it. Then you can change the color. You can make it black. Then you can change the thickness, right? Make it bigger. Then you grab it again and you come to the line and you make sure they match, they align, right? So you know, boom. So you know this candle here, when it comes to the indicator, is here, right? This high here is down here. Then you do the same. Okay, let's see the most recent high, right? Which is this candle here. You put the line on top of it. Then you do the same. You come down and you make sure it matches. Boom. Fantastic, right? Now, what you can do, you can grab a trend line and connect the both highs. So let's connect this high with that high. Same thing, you can make it thicker. You can change the color to black, right? So we can see it's going up. But when it comes down here, you do the same thing. Let's use a trend line. So what is it doing? Can you guys spot what's happening? Let me move this and move it back. Can you guys see what's happening down here, right? Up here, the market was it's saying that it's doing higher highs, right? But here it's doing lower highs. This this high is lower than this one, right? So remember, when the market is uptrending, it's supposed to be higher highs, higher highs. One high always higher than the previous one. But in this case, there's a divergence, guys. So this is what divergence means, right? So you use the indicator to tell you, okay, who's really in the market, right? The market is an uptrend market, right? But is there any really bias down there right now, right? So if the market's going up, it's telling you the buyers are in control. And this indicator really shows you if there's really any bias if the market's going up, right? So in this case, what can we spot? Divergence. So we know the chart is doing something, the indicator is showing a different thing. So it's not the buyers in control right now, the sellers are. But the chart is telling you no, the buyers are the one in control. But the indicator is telling you no, there's no actually volume or buyers in the market. The market is actually going down. So this is when you know straight away, boom, there's an extra confirmation there, right? There's an extra confirmation there. And this is divergence. So use these lines, use the vertical line, right? Put it on the previous high with the most recent one, right? You don't need to go much further back, but you can if you want to, right? Then you put it on top of the candle. Then you come here, you grab the line again. You just make sure it aligns and everything, and then do the same thing. Grab the trend line and connect both and see what direction is doing. Okay, going up. Down here is going down. And what do we see happening here? Right? What do we see happening here? Big red candle. If you can spot divergence, right? You do all the confirmation and you spot divergence, go for it. Just make sure you adjust your risk. All right. Just make sure if you're entering a little bit far from the entry point, make sure you adjust your risk to your entry. All right. Now we know. Boom. So in this case, if I wanted to enter this one, all I would do, I would get a short position, and I'll talk about this, right? I'll get a short position because I want to sell, right? I'll just put it, let's say, for example, I enter market execution, boom, right? That's my entry down there. I can see there's a little bit space between the entry, the current price and take profit, confirmation match, boom. I can take profit too. And now I don't want to be using the same stop loss, right? Because this stop loss is aligned with this entry. I'm entering here. So I should adjust my stop loss to my entry point. And I could just go for it and enter the trade. And I already just adjusted the, let's say the stop loss, 30 pips, right? I'm comfortable with it. All right, 30 pips to make like 74, 75 pips, 78 pips. Fantastic, good risk to reward. All right, not bad. There you go. You just enter your trade and you already adjusted your risk to the trade, right? So with divergence, it gives you kind of stronger confirmation, but it's something that you really need to practice on train your eyes to see. Now, and everything, guys, you can do all this confirmation, but it doesn't mean that you will not lose a trade or anything like that, because things happen in the market, right? Things change, right? But these confirmations are there to help you, okay? So it will happen. Sometimes you have all the confirmations checked and it's nothing that you can do. The market will be the market. You already do all the best on your power, okay, to protect yourself, but the market will do whatever it has to do. All right. Now, rejection candle, guys. So this is divergence. So this is how you spot it, so you visually can understand, right? Now, let's talk about rejection candle. Let me see if I can say it here, right? Guys, if you guys see something like this, right? Let me just explain you guys a rejection candle, what it is. A rejection candle, for example, this red candle that you guys see in here, let me zoom in. It's really important. I'll actually change the color of this. Let me put it here. All right, this red candle that you guys seen here, I'll change the color to yellow. This red candle that you guys seen here, before it turned red, it was fully blue all the way up to here, right? All the way up to here. But before the time finished, the sellers decided to, no, we don't want the price to go higher. We're going to sell, right? So they came and they overrun the buyers. They pushed the price down, which means they're rejecting. They're not allowing the price to go higher, okay? Higher than that. And they tried here, as you guys can see, the previous candle, right? They tried it. The sellers came in and pulled it down a little bit. They tried again. The sellers pulled it back down again. And same thing here. They were trying, but the seller didn't allow it to go up further. So if you see from around the entry, this type of candles, right? This candle was fully blue before it turned red. Fully blue, strong buyers. But before the time finished, the sellers pushed the price down. So it means it's rejecting. It's giving you that extra confirmation that the sellers are really about to take control because they're not allowing the buyers to push the price higher. So every time that the buyers push the price, before the time finish, the sellers push it down. So that's how you guys know that. So you guys have divergence. You guys have rejection candles that looks like this. For example, let me give you an example of another rejection candle. Even if it's something like this, right? Something like this. So guys, a candle will have a body, and when the candle is losing strength, we'll leave wicks behind. Okay, we'll leave these thin bars behind, right? The wicks. Okay, so if you see something like this happening from the entry area, especially if it's a sell and the price, they try to push the price up, but no, rejected. Up, the sellers push it down. And you guys have divergence also together. Go for it. Enter and sell that currency, right? And adjust your stop loss, okay? I hope it's making sense, right? We nearly, okay, fantastic. I hope it's making sense. All right. So rejection candle looks like this. Let me give you guys about another example. Let me just save this on here. Let me just put it here. Example. And also, guys, anything that you guys do into the Harmonic scanner, you guys can actually save it. All right. You can save it and come back to it, and all the drawings that you did will be here. All you do, you come to here and load. And everything that you saved, you can just press it and it will load that exact chart, exact drawings that you put into it. All right. Now, let me show you guys another example of something like rejection candle. Let me see if I can find one. Look, right? This here. This is a buy example. This is the NZD USD that was sent into the group actually today. Right? Look at this candle. This candle was fully blue all the way, red, all the way down here. But before the time finished, the buyers didn't allow the price to go lower. They pulled it down. And what happened? After that candle, what happened? A big candle up. Buyers, boom, push the price up. Right? It did hit take profit one. All right, guys, if you see a rejection candle from the entry area, around the entry area, just know that the opposite side is not allowing the price to go higher or lower. Then you know possibly a change of power in hands might be happening. Okay, and you use the RSI once more. What I can see happen here when I came into it. So let's find divergence in terms of, let's say in a buy, for example, like in the buy example, right? As you can see, the market was doing, let's see, for example, from the previous candle, the market was going down, right? Was doing so when the market's going down, it will be doing lower highs, all right, and lower lows. Okay, lower highs and lower lows. right? So this low is lower than this one. This low is lower than this one. But what was happening here? The opposite. The opposite was happening, right? The opposite. This low actually, right? This low is supposed to be, let's say, in this case, it's supposed to be all the way higher down there, right? For example, this low, right, is actually, hold on. So this low here is supposed to be lower than this one, but this low here is higher than this one. Actually, can you guys see divergence on the buy example? It's the opposite is happening, right? So here the market is doing higher highs, higher highs, higher highs. And here the market was doing lower lows, lower lows, lower lows, right? But the RSI is doing the complete opposite. That's why I also decided to buy it. I saw this candle getting rejected. I saw divergence. I decided to buy it. Boom, take profit one, right? And now there's just power struggle here, right? As we can see, currency strength, NZD and USD, they have the same strength, and it's the end of the day, so things are happening way slower. All right. I hope it's making sense, guys. Divergence. You guys can really spot this. Okay. You guys just really need to train your eyes. And the same thing that we did with, let me get the vertical line. The same thing that we did. So you check the previous low or high, right? You align it. So this is the one. Let's find this low here. Boom. Let's see what it's doing. And if you guys can see, you connect both going up, here going down. So you know there's no sellers. There's the buyers were the one about to take control. There's a rejection candle. Before the time start to finish, the candle was already losing strength. And that is divergence, guys. All right, guys, this is the simplest way that I find to explain divergence. Right, so use the RSI, even if you try on your demo, and you just really need to train your eyes to see. All right. Now, okay, I hope it's so there's the color of the, it doesn't necessarily need to be it doesn't necessarily need to be the opposite color, right? As long as you see that that candle lost strength, right, to the opposite side. For example, this candle was all red, all the way red, full, but it lost some strength, but it ended up red, right? But look, all the strength they lost, and a big blue candle straight away. So it doesn't need to be the opposite color. As long as you see rejection, right, you can still think. It doesn't really need to be the same color, right? But if it's the same color, much better. If it's not, it doesn't really I mean, in my opinion, it doesn't really affect. As long as see, let me just delete this. I think is making the thing go a little bit. Let me delete this line. Second, as long as see, especially something like this, guys, look at this, right? Look at this candle. It was a big candle, big candle, and it lost so much strength. Lost. And what happened next? Boom. It even went blue a little bit. Then it stayed just in the red, but it lost all that strength. And look at the big next candle that came up, right? Guys, this is something that you guys really need to train your eyes to see. All right. If you have any question, just drop it. And also, guys, like I was saying about the risk, right? Like I was saying about the risk. For example, if I wanted to enter this trade, for example, this one, okay? If I was entering in here, all right, and it's still far away from, it's very far away from the entry point, right? You already start making the move, and it's just in between the take profit, right? So I don't want to be using the same stop loss that the scanner is giving me. I want to adjust my own stop loss, right? So get the risk to reward tool. If you buying, you use the long one. If you're selling, you use a short one, and you just place it. Let me just delete this one. then you just place it, let's say on top of that candle, for example. You just place it there, boom. The red bit means your risk, what you're risking. And we always advise, and the educators, 30, 40 pips maximum. And this is a tool that tells you already, that already does all the maths for you, right? So let's say that I want to risk 30 pips. All I do is on the side, just adjust the red bit because that's my risk. And I want to make sure that I want to, the difference between my entry and stop loss, I want to make sure that it's 30 pips, right? Let me just put it down, 30, 40 pips around it. Boom, 30 pips. Always ignore the last number. So your pips are here, right? Ignore the last number, right? So this is your pips. Ignore the last number. So I know the difference between my entry and my stop loss is 30 pips, right? It's within the pips that I want to risk. Now, how do you know what price to enter into your MetaTrader 4 into your stop loss? The price in red, right, represents the red bit. So this is the price that you would have to put into MetaTrader 4 for your stop loss to be 30 pips, right? And let's say that you want to take profit, let's say all the way down here to take profit too, right? It's telling you already how many pips are you going to get. 77. Ignore the last number always, right? Ignore the last number. That's the pipette. Ignore it, right? So you know I'm risking 30 pips to make 77. Okay, right? And adjust the risk to your entry, right? You don't want to put because otherwise, in this case, if I want to put the same stop loss, is how big is this stop loss? Like 106 pips stop loss. No way, right? Unless you want to just leave it open like that, right? But always protect your capital first, right? Always protect your capital first. So use the risk reward, and if you enter in market execution, boom, enter and adjust your stop loss 30, 40 pips. And if you want to put more, up to you, but always adjust your stop loss. All right, risk management. Okay.